It's so early. I'm your host, Will Shelkoff, author of The Bitcoin Dog, Following the Descent to the Bitcoin C++ source code, and a contributor to Bitcoin Magazine. I'm here with Jordan Wirsz. Jordan, great to have you on.
Will, thanks for having me. Happy to be here.
Yeah, if you could please introduce yourself and tell people where they can find you.
Absolutely. So I'm Jordan Wirsz, and I'm a blockchain Bitcoin investor. I'm invested in a lot of different areas in the entire blockchain space, but my background is as a 20-year commercial real estate and residential real estate investor, fund manager, broker, consultant. I think I filled just about every role in real estate that one possibly can. And a couple of years ago, found myself interested in Bitcoin and went down the proverbial rabbit hole. I spend a good amount of time on Twitter at Jordan Wirsz and at Savant Report, and I publish content for people who are interested in the subject.
Cool, very cool. Yeah, I think the first time I was introduced to you was in a Twitter space. So I definitely, I just remember you talking, I forget what the topic was in particular, but I just remember how clear you were able to explain things and explain your position. And in particular, just how your journey into the blockchain space, like many people, involved just learning more about cryptocurrency overall. But I'd love to hear you tell your story. What is your Bitcoin story of how led you to Bitcoin?
Well, I'll tell you, my Bitcoin story is a sad one. I had a friend talk to me about Bitcoin. I think it was, I'm going to say plus or minus about 2011, 2012.
The very beginning.
The very beginning, like at the very precipice of this. And, you know, I was literally licking my wounds from getting absolutely crushed during the great financial crisis. I didn't have a lot of money to invest, and I was very shy of taking big risks. And I had a friend introduce me to this thing called Bitcoin, and he was trying to explain just the idea that it was, you know, Bitcoin that transmits on the internet, or a currency that transmits on the internet, and how fascinating it was. And I just thought, well, like, that's stupid, right? that old adage that it's magic internet money. I thought, like, who would actually invest in this, you know, internet coin, right? And I dismissed it. I distinctly remember the conversation. I remember where I was, and I remember the time of day. I remember everything about it, and I just remember completely writing it off and just thinking that it was some, you know, foolish thing on the internet. I kind of equated it to gamers. You know how games have these in-game tokens, and
credits.
I thought it was something kind of like that. It just didn't make a lot of sense to me. So fast forward, you know, a couple of years, and I think Bitcoin hit, I want to say $1,000. And I remember distinctly sitting in a restaurant, having a conversation with an associate of mine at the time, and saying how stupid I thought this, you know, Bitcoin price of $1,000 was, and, you know, how I had the opportunity to buy it much lower, but, you know, this is ridiculous. Like, it's going to zero. It's a fad. It's Beanie Babies. It's, you know, it's ridiculous. And fast forward another few years, and it hit 20,000. And I still thought, this is absolutely ridiculous. Like, this is the tulip mania times 1,000, and this is going to zero. So again, you fast forward kind of another cycle, and we found ourselves in and around COVID. And I watched what was happening in the financial system and watched asset prices crash. And I was having a conversation with a friend of mine and said, you know, what do you think about this Bitcoin thing? Like, it's not going away. I keep seeing this in the news all the time, and I just want it to go away. I think it's stupid and ridiculous, but it's still here, like, years and years later. I don't know what to think about this. And it was at that point that I actually started thinking loosely about having an allocation to Bitcoin. So I've spent the last 20, 25 years of my life as a professional investor, whether it's real estate or any number of other things. And so I've had to, you know, focus on preserving capital, priority number one. And so investing in some magic internet money wasn't really an attractive thing up until the point in time I realized it wasn't going away. And when I knew it wasn't going away, I started looking into it. Very, very, very little. I couldn't
And
figure.
just to be clear, the point where you knew it wasn't going away, that was March 2020. I know, because everything was crashing, including Bitcoin. But when was the wait, it's not going away? Because I know you, or is it just you keep hearing it in the news even during COVID?
I'm going to say probably April of 2020.
Okay.
Right? Like that moment where the market crashed and everything was going to zero. And I thought, if anything should go to zero, it should be Bitcoin, right? And it didn't. And I watched CNBC, and I was watching the capitulation and the big drop. I think it was from $7,500, something like that, down to 3,500. And it shot right back up. And I thought, like, okay, something is going on here. This isn't going away. So fast forward another 6 months, and it took me 6 months of just exploratory, asking people, where do you buy it? How do you hold it? Like, is it an actual coin? I hear people lose it. Like, how do you lose your Bitcoin? And it was November of 2020 before I actually even knew what Coinbase was, before I knew, how to buy it. And my mind still could not wrap itself fully around Bitcoin, but there was an entry point, and that entry point was at a pretty decent time. And my portfolio tripled over the course of the next like 2-3 months. And that's what made me dig deeper into it. That's what made me say, oh my gosh, it's hitting new all-time highs within a year of COVID. What in the hell is this asset class? Like, why does it keep going up? And I wanted to know more.
Yeah, the power of that number go up technology. Well, that's other interesting thing to me too, because it sounds like for the most part you characterize yourself as a career in investing. Like, if you, I know maybe you've had multiple professional pursuits, but that you identify as an investor. And I really am impressed by your discipline, because I think it was in your Savant Report podcast with TXMC, I think I'm saying his name right, where you said during that 2009 recession, you were on the brink of bankruptcy, or at least very close. What a scary place to be in. And so when you did first hear about Bitcoin in 2011, it could have been the other way, where you were desperate and just were like, oh, whatever capital I have, I just have to throw it all in. This is my, my ticket. It's all or nothing. And yet you did have the discipline to say no at the time, which I think is a perfectly reasonable position to have said no to Bitcoin at 2011. I mean, it was so new. Kudos to all the people who could understand it back then, but with your disciplined approach to investing, I think it's fair to have been skeptical to it. It is interesting to me how you remember that conversation so vividly, though, instead of, oh, that was 10 years ago. I can't even remember. I'm curious if there's a reason you think that one was the one that made you remember it so well.
I don't. Ironically, I was having a conversation with the same friend and again, I believe it was 2011. Don't quote me on that for certain, but not 2011. The same friend back then that ultimately said, okay, here's how you buy it. You go to Coinbase, right?
So they were the one for you in 2020 that came around to help you.
10 years later. And I knew he was into it, and I never really, paid much attention to it. And occasionally he would mention something about it. I really had no interest. But I will say this, the people who got it back in 2011, 2010, super early, if they read the Bitcoin white paper and they got it, they're far smarter than I am. Because I still read the Bitcoin white paper today and my eyes gloss over and go, like, this sounds super technical and super interesting, and I guess it solves this problem, but I still don't really get it, right?
Yeah.
But when you learn fundamentally about different nodes and a distributed ledger and protecting the system and SHA-256 encryption and how it works, and that every Bitcoin is its own unique fingerprint, and it can be demised into Satoshis, right? Which is a really, really small unit of measurement inside of one Bitcoin. When you start to learn all those things, which are really, really technical, and you understand the Byzantine general's problem, and you understand the double spend problem that Bitcoin solved, like that's not something that in 2011 or even today that I could read in a white paper and say, aha, I get it. Right.
Yeah.
It
Right.
took me hundreds of hours of watching podcasts and reading blog posts and researching terms on the internet. My wife even bought a book about cryptocurrency and Bitcoin that helped explain it. And like it took a lot of learning for me to actually understand. And it took my portfolio, the amount that I put in, roughly tripling, for me to actually take it serious. Like prior to that, I was like, I'm just going to put a little allocation into it because it's not going away. I should have exposure to it in one form or fashion. But after I understood what it was, that was the all in moment. Not all of my net worth, not all of my investment capital, but all in terms of I got it. The light bulb went off, and I said, "This is going to change the world."
Yeah. Okay. That's an interesting one too. So I can totally appreciate the idea of trying to allocate at least a little bit toward Bitcoin, just a small amount of your portfolio. I think that's great for so many people just to get off of zero, because it just forces them to want to learn more about Bitcoin and take a second look. Nothing crazy, whatever is a small percentage, to whatever investor. And that was a success story for you as well, that by at least putting in some, that just even furthered your understanding. However many 6 months it took you to learn about it, to even put in a small amount, and then from there the knowledge even grew. Do you have an aha moment in particular that was like, oh, like after the price went up, or was the value going up, the aha moment?
Michael Saylor was an aha moment for me.
Yeah.
When the news circulated that a public company CEO had invested, $500 million in Bitcoin. And Michael Saylor's no dummy, right? He's very smart. He's very articulate. He's very well thought out. He's very well studied, right? He's, I think he's an MIT, grad. He's not a dumb guy.
Yeah.
And when you read that headline and you go, okay, I want to dive into this, and then you watch him talk and articulate, that was a pretty big deal for me. Now, I don't like everything that Michael Saylor does. I don't agree with all of his investment decisions. I mean, arguably, not all the time, but most of the time, whenever he buys the dip, it keeps dipping and it keeps going lower. Like
That's
Michael
right.
Saylor buying additional sats is just a reason to wait for a deeper dip.
Yeah, and sadly, I haven't heard him announce that he's bought this dip. Normally he announces it immediately, even if it's "quote unquote" only $25 million. But if he's bought this one, I haven't heard it yet. But maybe he's just trying to make sure that he's nowhere close to getting liquidated on his very small 4% loan to value loan.
Yeah, I think he did say the other day, he did make a comment that alluded to the fact that they're looking at it strongly.
Okay, yeah. Of buying more dip, yes.
Buying
which means
dip.
The price will go lower.
Highly likely.
Yeah.
Highly likely.
Yeah.
And unfortunately, I think it may. The price may go lower. I've been pretty vocal, on Twitter and pretty vocal in the spaces. Price is an interesting thing for Bitcoin. Price is something that every investor looks at, right? But there are so many people in Bitcoin that aren't just investors. And that's what makes it so interesting and fascinating to me. Doesn't make it any more or any less investable, but it makes it interesting because there's people who are into it for, I've used the term, I used it with Dennis Porter on a podcast, I don't know, a couple months ago, the term financial anarchy, right? There's a group of people who are interested in Bitcoin because it's decentralized, it cannot be controlled, it cannot be seized, it cannot be screwed with, it cannot be replicated. It is one of a kind, and you own a piece of 21 million of one of a kind. And that's really interesting. Then there's the human rights aspect, where you have these people very, very interested in improving the world and improving access to money and bankability throughout the world. A problem here in the United States that, most of us in first world countries, we don't have the same kinds of problems that they have in Venezuela or El Salvador or, parts of Mexico or any number of other countries around the world. And then you have the investors, and you have guys like me who are interested and attracted to it because we're fascinated with the idea that it's number go up technology. And then you have the computer nerds, and I use that term with endearment, right? And great respect for the computer nerds who love the technology, who are in love with this mathematical beauty that is Bitcoin and how it's work and how it works and how it's designed and how unique it is and how everything interconnectedly works together to make this network what it is. And so there's people into it for a lot of different reasons. I just came to it as an investor, and then I kind of fell in love with all the other narratives along the way.
Yeah, it's pretty powerful when you think the concept of it being a fake magic internet money, and of course the most common attack that it has no intrinsic value. But as Saifedean says in Bitcoin Standard, that's the key for it to just be a good money or just exist as a public good. Its value means different things to different people. I think Alex Gladstein is probably the biggest one pushing the human rights aspect of it. Previously, I had Eduardo Gonzalez on my podcast. He's on Twitter. He's from Venezuela, so he shared with me his personal story appreciating Bitcoin. And then I had Anthony Feliciano, another Bitcoin magazine contributor, on my podcast last time, and he liked that concept of, oh wow, criminals are able to make transactions and stuff, and it can't be censored. Like, that was not that he's a criminal, of course, but just that was appealing. Like, wow, that power, it really is, a free trade in that sense. That's what drew him in, and all these different use cases.
And I want to touch on that for a minute, because I've operated in a world where you have to be on the up and up if you're going to succeed long term, right?
Yeah.
And my friends, my family, my associates, my business partners, people are way on the up and up, right? I don't deal with shady characters. I don't want to deal with shady characters. I don't want to deal with people who have reasons to be underground doing things. And one of the big narratives around Bitcoin for many, many years was that it was used for illicit transactions. And I think for many years it was. I have a really fascinating story, and I won't go into it unless we have time, and you tell me we have time. I'm a pilot by first profession, or I should say pretty close to first profession. I started flying very, very young. I've had a passion for it. Found a guy, I don't know, about 7-8 years ago in the jet warbird community, and I wanted to buy a jet. I decided I wanted to just have fun and fly and do air shows again. I was an air show pilot way early on in my early 20s, and said, I want to go get back into this realm. Well, it turns out this guy that was at a pinnacle in the jet warbird community as a pilot owned, I don't know, 30 or 40 vintage jets, okay? Had like, I don't know how many 100,000 square foot hangar with all of his airplanes. Supposedly a very up and up guy in every respect, YPO member, nationally recognized, internationally recognized as a jet warbird guy, dies in a plane crash.
Oh,
and
no.
Post-death, they actually disclosed, the Department of Justice and FBI disclosed, that they figured out that he was laundering money for a drug cartel and had some really crazy ties to these international drug cartels. And they found him because he was using Bitcoin and cryptocurrency in transactions. And so, it made me think, and this is, I think, going back to maybe about 2018, 2019-ish, give or take. And it made me think, well, hang on a second, how did they find him, right? Like if Bitcoin is this illicit transaction use, type of currency, how is it that they found him? Well, when you get to know what Bitcoin is and how it works, right? It completely takes away this narrative that people use Bitcoin for illicit activities because it is the most traceable, the most immutable cryptocurrency on the planet. And
Yeah.
and these people who were doing bad things, and this guy that I was acquainted with, right, was one of them, which totally shocked me. I never would have thought this guy was one of those kinds of guys. But then you realize, like, the stupidest criminals on the planet are the ones that use Bitcoin for illicit transactions, because it's 100% traceable. It might be anonymous, but at some point it's not going to be, right? Somewhere along the chain. Now it's immutable. Nobody can steal it from you. Nobody can hack it. Nobody can seize it from you. They can't get into your wallet. They're not going to guess your seed phrase or what your private keys are or anything else. But it's not a good illicit purpose tool. And I think that's like really important. The people that I've talked to over the last couple of years, one of the first questions when I try and orange pill somebody is, isn't this what criminals use? And then I have to explain to them how the whole thing works and why criminals would be stupid to use it. And so, like, there's so many narratives in and around Bitcoin that I think I've even participated in propagating over the last decade because I really didn't know what I was talking about. And I think a lot of people that talk about Bitcoin or see Bitcoin on CNBC or come across it in a newspaper article or listen to Elizabeth Warren yelling on some TV show, right? They don't understand because they're actually not given the real story. And so I think that's really important for people to know. Bitcoin is not a good tool for illicit transactions. It's one of the worst things you can do.
Yeah, no, that stigma is just absolutely still there. And like you said, I think there's a few politicians still propagating that narrative also. So
it's sickening. It really is, because it's so false. And they know it's false. Like, anybody who knows anything about Bitcoin knows that's a false narrative.
Yeah. So that's where I wonder, maybe that's what some market participants are waiting for is, I think if there was more regulatory clarity about Bitcoin, that ultimately could be a good thing. I know some people don't necessarily want it. And I know Joe Biden put out an executive memo recently asking all the various cabinets or departments to look into cryptocurrency or blockchain or Bitcoin. But yeah, I'm curious, are people necessarily looking for some sort of declaration from the president, whoever the president may be, to say, hey, I deem it legal for you to, self-custody this digital asset, Bitcoin. At what point are some people comfortable that, oh, this is not something for drug dealers? For me personally, just seeing that Coinbase could exist as a publicly listed corporation that just sells Bitcoin, to me, that was the big clue of, okay, this is a official licensed company. That should be enough. But yet the narrative persists.
It persists, and a lot of other false narratives persist, right? I guess we could talk about regulation just a little bit.
Sure.
I think from my perspective, as an investor in the blockchain space at all, which is, going to upset a lot of maximalists, and I get chewed out every time anybody finds out that I'm invested in anything other than just Bitcoin. But I will say this. I spoke up about Celsius, a month and a half ago, 2 months ago, when it became really obvious to me that it was a Ponzi that was going to blow up, right? And in a perfect world, the regulation in an industry or self-regulatory bodies would have seen the writing on the wall and probably stopped it before it grew to a multi-deca-billion-dollar business, right? Because now, and I don't know what the final number is that Celsius holds, but it's well into the billions. I think it's probably more than 10 billion.
Yeah, 10 billion is the number I heard.
Those investors are screwed. I mean, they're not getting 100 cents on the dollar back, right? And that has nothing to do with crypto, by the way. It has to do with the lack of good regulation. Now, my fear, so I do want regulation. I think regulation is a positive. I think regulation can offer a lot of clarity to people. But my fear is that we end up with stupid regulation, What is stupid regulation in Bitcoin? Well, stupid regulation is, outlawing Bitcoin mining, right? Like what they're trying to do in New York. There's this narrative that Bitcoin mining uses more energy than some countries do. Well, you know what? Tumble dryers, electric tumble dryers here in the United States use more electricity than the Bitcoin network does. And Bitcoin network holds hundreds of billions, at one point, well over $1 trillion in value and monetary exchange outside of the banking system. So you want to talk about how much energy does the banking system use, right?
Yep.
So there's all these narratives, but my concern is stupid regulation. And I think that, this ESG narrative, which we all know, I think for the most part is BS. I don't think it's going away, but I think it's BS. And I think it's being pushed into the Bitcoin space. And if they limit mining to ESG type friendly, power sources and those kinds of things, I think that ultimately takes out guys like you and I who maybe want to have a Bitcoin mining machine in our garage, right? Who we want to participate in the network, and we want to earn our Bitcoin rewards. And internationally, what's interesting is that internationally, every country is taking their own view on Bitcoin, right? You had Russia at one point said, hey, we think we should outlaw it. And like the next day they came out and said, actually, like we could be pretty good at this. Maybe we should look into this a little more. And then you've got China, which has banned it umpteen number of times, but now we find out that they still have a big piece of hash rate. We know that China and Russia are hoarding Bitcoin. You have El Salvador, which is legalized it as tender. And so I think what's complicating things right now from a regulatory perspective is that nobody knows from one country to the next, let alone one state to the next, how they're going to be dealing with it, right? And that's a level of uncertainty that's not productive for continued adoption and investment in the space. But I will say this, it is much better to be having the debates and to be dealing with the issues than where the Bitcoin network was, 5 or 6 years ago, right? Because we're umpteen much bigger.
Yeah, I think the big distinction you're trying to draw is regulation where it protects the investor protections, making sure that there's regulatory declarations of what are the products people are buying or selling. I think that was the thing in particular for maybe BlockFi or even Celsius, that they were advertised as bank deposit accounts, but they're not bank deposit accounts. I forget the name is, but should be treated as an investment account, something like that. And then on the other side, you have the legislation on the mining itself, which is more core to the Bitcoin protocol. So I think I agree with you there that regulatory clarity could come maybe for investor protections on products around Bitcoin for the consumer. But it's interesting if they try to do regulation on the Bitcoin protocol itself, how they're going to go about that. And I think that's another thing, again, comparing 2011 to today, maybe back then, Bitcoin was not nearly as developed, not nearly as vast of a network, not nearly as decentralized, that it could have been squashed earlier, but I think it's not the case anymore. I mean, I won't say never or something, but it's grown so vast, like you said, over $1 trillion of monetary value. Even today, I think we're just under $400 billion in monetary value. And that was one of the most interesting points to me. Someone said was, even if the price of Bitcoin today is similar to the price of Bitcoin at the all-time high in 2017, the market cap of Bitcoin is so much higher when you account for all the new Bitcoin created between then and now. So not that there's that many more Bitcoin to be mined, only 2 million more, but it is a much bigger network.
It is. And, I want to touch on the regulatory issue once more about investor protection in particular. And then I want to touch on what you were just talking about. Let me say this. I'm actually really frustrated with the SEC, and I'm really, really frustrated with the regulatory bodies, because in one sense, they let companies out there like Celsius, right? They go after BlockFi, who's a very
Is
legit.
Celsius a US based company? I
Oh
don't know
yeah,
that. They
yeah,
are?
they
Okay.
are.
Because FTX is not a US based company, right? But Celsius is?
Celsius is a US based company.
Okay.
And they let Celsius to some degree, right? They've been investigating. I think they've been looking into it. There's been, ongoing I think they even posted on their website, like they have ongoing conversations with regulatory agencies. Okay. They let this stupid asinine model continue. And yet they won't convert GBTC to a spot Bitcoin ETF. Right? There's $8 billion of individual investor value. Guys like you and I who own GBTC, I don't own it, but maybe you do. Individual guys like you and I who own GBTC that have $8 billion locked up in a spread between spot and what GBTC is trading for because it's locked up, because they won't convert it to a spot ETF, which was the intention from the beginning, right? And there's 800,000 accounts that own GBTC that can't find the liquidity that they need at a fair price. How is that protecting investors? Now, they go find BlockFi $100 million for the same crap that Celsius was doing, except Celsius was way worse and way shadier and way more crooked. I don't think BlockFi is crooked, right? It's a business model that is questionable in some people's view. Celsius is just unbelievably egregious, right?
When you did take your look into Celsius, was it to be a potential investor or was it to be a customer? It was to be an investor.
It was to be a customer. It was to be a customer.
To be a customer. Okay.
So I had people, friends in the community that basically said, Jordan, you got to consider getting some yield. You should stake some ETH. ETH 2.0 is going to roll out. Yields are going to be 10 to 15%. Blockdaemon's doing some amazing things. You really got to think about earning some yield. I just wanted to let my Bitcoin and my Ethereum accrue in value over a period of time. And at the same time, I like earning yield. And I was looking at ways to do that. And a friend said, you should check out Celsius. So I had such a horrible customer service experience on the front end of the platform as a retail investor. I reached out to the institutional side and said, hey, I'm interested in putting a substantial sum, at least to me, on your platform. And they set up a Zoom call. And I spent, I want to say probably a half an hour, maybe a little more, maybe 45 minutes on a Zoom call with an institutional account manager at Celsius. And what he told me blew my mind. He told me, you're an unsecured creditor. We commingle funds. We convert your funds and your crypto into whatever we want. We invest it in whatever we want. And we don't know all about what that is because they don't tell us, at the top levels of the company. That information doesn't trickle down to us.
They don't tell you, the institutional account manager. What's their purpose then?
I just I was blown away. And I asked him, do you have insurance? How do I know that my stuff is protected? And he says, listen, number one, you're an unsecured creditor. And number two, we have 800 and some odd million dollars of insurance, which is, in his words, grossly underinsured and grossly insufficient because we have, umpteen billions of dollars of assets. So, I just got off that call and I really think that the guy knew that Celsius was on its last legs. And I think he saw a young guy who's worked very, very hard to get the nest egg that I've built for my family and I. And he's like, I don't want this guy to lose money. I'm going to shoot him straight, right? I'm just going to tell him, how it is. And I'm going to let him make the decision. And if he invests or decides to put money on our platform after me telling him how it is, then that's on him. But I've been around investing for 25 years. And so I've seen a lot of good and bad deals. And this thing just reeked. Red flags everywhere. And I felt the need to try and save people. Now, ironically enough, probably a week after I posted that video, one of my friends locally here in North Idaho said, hey, Jordan, I've got this guy who wants some insight from you. would you talk to him? He's a good friend of mine. I said, sure. A guy calls me up and says, well, I'm just wondering what to do with my portfolio. Like, I've put 90% of my net worth in crypto and Bitcoin. I've got millions of dollars tied up in this stuff. I have $1 million of altcoins. And I'm watching the price go down, and I really don't know that much about it. Like, what should I be doing? And one of the things he told me in the course of that conversation was he keeps 7 figures on Celsius. And I said, get your money off of that platform now. Don't wait for tomorrow. Like, I don't care if you have to spend all night trying to unwind this. Get your money off the platform. Well, he did, and just about a week ago, got a text from him and said, Jordan, thank you. You literally saved me 7 figures. I had 7 figures on Celsius, and it would all be gone and untouchable for who knows how long, right? Yeah. Maybe would have gotten 10 or 15 cents on the dollar. He's like, I'm just so grateful you told me to get off. So I felt like I was doing a service. Like, I really don't like talking bad about other companies. I don't like trash talking people or putting people down for having opposing views or any of that kind of stuff. Like, that's not my gig. But when I see people being put in harm's way and people potentially going to lose significant sums of their hard-earned money, it just makes me want to speak up and say, like, I can't let this happen. I at least have to warn people.
Yeah, I mean, and that's the interesting thing, because that's where I think if I was the chair of the SEC, if I was Gary Gensler, that's in a sense, I guess, his job too, as long as he doesn't do it in an overreach kind of a way or doesn't do it in the wrong way. So, there's a sympathy there for, I do want to, protect people, but in a way that makes sense or something. I don't envy his position. It's a tricky job. The thing with Celsius that made, were you gonna say something?
Yeah, I was just going to make a comment on that is, I know a lot of companies out there and CEOs, CFOs, CIOs who are reaching out to the SEC for guidance, right? Because they go to them and they say, we want help. Like, we want to do this the right way, right? We're not trying to do anything wrong. This is our program. This is what we're going to be doing. Is that okay? And you know what they get from the SEC? Nothing. What? Nothing. They get silence, or they get, look at the regulations and make your determination, have your compliance department look at it. Like, no. We're coming to you because we don't want to get in trouble, right? I think it was, I don't remember, I want to say it was Coinbase was going to, correct me if I'm wrong. Was it Coinbase that was going to issue a lending product in the SEC?
They do have one. Yeah. But what, they threatened them?
Yeah, well, they were like gonna roll it out. They had announced it. They were getting ready to roll it out. And then all of a sudden they get a threat from the SEC says, we're going to sue you if you launch it. And they're like, we've been talking to you about this. We've been asking you, like, guide us, tell us, what can we do? What can we, not do? How do you guys view this? Silence until they want to go find somebody or sue somebody, right? They're not a regulatory agency that's out there playing on a level playing field with all the different, actors out there trying to do things the right way. They're just playing this like cards close to their chest kind of a thing. And I think it's horrible. I think it's a total disservice, not just to the American people, which is who they serve, but it's a disservice to the entire cryptocurrency, blockchain, and securities industries as a whole.
Yeah, no. So that's where I think if they could at least have a couple key properties where they say, these things are definitely fine. Everything else, that's the Wild West, that's the frontier. Once you've gone too far, we'll hit you with $100 million fine. But at least to have something be, this is true. I think, so one of the things that was a red flag for me, and I'm curious if you think a company could do this in a proper way, but the big thing to me was that Celsius issued its own CEL token, CEL token. And I had friends who had Celsius, and of course I had friends invested in Celsius, and of course, or at least had their Bitcoin on Celsius, and were trying to tell me to do it. And so for myself, I never put any Bitcoin in Celsius, but
good for you. Good for you.
But I would tell them the CEL token is crashing, and to them it was totally unrelated, like as if that there's no red flag there. You know, the sell token has nothing to do with the, you know, the solvency of the company. So I mean, to me, obviously, like that's the one thing. I mean, Do Kwon, I don't know what he did with the Terra or Luna, but it was at least very clear. The whole purpose of the Luna token was to mint as much of it as possible to pay out the UST for $1. Like that's the purpose of the Luna. So, and he gets to generate as much Luna as he wants. There's no perception of there being a fixed supply of Luna. So, I mean, is there a space where it makes sense for a reputable company to issue its own token? I mean, I interpret it as a proxy for stocks, but not really. So,
you know, I will say this, and in all intellectual honesty, I'm not smart enough to think through all the scenarios where it makes sense for a company to issue their own token, right? Other than for gimmicky marketing, you know, kinds of purposes. Now, I know that there's technicalities to some of these algorithms and some of these business models that take a mathematician or a very, very astute technical person to really understand the mathematics and the white papers of how these projects work and why they issue their own token and how those tokens can accrete value. And I don't want to say that there's never a time. Okay, there might be legitimate alt protocols, altcoins that make sense for practical reasons. I still think that it's a very risky bet, right? I think it's using the words of Dr. Jeff Ross, who was on my podcast a month or so ago. He said, listen, altcoins are basically venture capital loosely tied to the blockchain. And I think that's exactly what they are. In Celsius's case in particular, okay, this is what makes it so egregious, is for me, as an investor for 25 years, again, I have that experience and that background to be able to peel back the layers of the onion very, very quickly and to see it for what it is. Now, if I hadn't had that experience, if I was your average Joe who got into crypto a few years ago, who didn't have a big, you know, background in investing and understanding the mathematics behind, you know, how yield is paid and whatnot, then maybe I wouldn't have seen it for what it was. But given my background, it was so clear to me. It was literally, I use the metaphor. Celsius was asking people to deposit their crypto on their platform. They were going to take that crypto and convert it to whatever they wanted to, whether it was Bitcoin or it was Ethereum or it was Solana or it was grass or if it was fiat or if it was Bitcoin mining operation. Like, it doesn't matter what it is, right? They convert it to whatever they want. And then what they did is they said, but here's what we're going to do. We're going to farm tulips. Okay. And so you're going to give us $1 million of your Bitcoin and we're going to pay you yield on that. Oh, okay. That sounds great. But we're going to pay you in tulips. What are you talking about? Pay me in tulips. What am I going to do with tulips? These tulips are going to go up in value, right? These tulips are going to go up in value. You got to own these tulips. These tulips are the best tulips on the planet. This is the way to do it. You don't want Bitcoin for yield. Deposit your Bitcoin, but you don't want Bitcoin yield. You don't want Bitcoin for your rewards or your interest on your deposits. Of course, they wanted to avoid that term interest, right? But what they were doing is they were issuing a token that was absolutely worthless, right? It's a mathematical protocol, just like any of these other altcoins, you know, absolute tons of it created, much of it on their balance sheet, right? So the company was just giving it away. It's like me mowing my grass and saying, I'm going to pay you for mowing my grass
with the grass clippings.
In grass clippings, right? Like, it just makes no sense at all. And so for me, it was so easy to see. And I still see people on Twitter to this day. And like, I get so frustrated. I've actually spoken out to some of these people that are saying, I'm a Celsian forever. Go Mashinsky. In Mashinsky, we trust, right? Let's make Celsius, build back better than it ever has before. It's going to come back stronger. And I'm going, not only are you in denial, but intellectually, how can you wrap your head around that level of denial, right?
Yeah.
And so I think, and this is really sad to say, I just think there's a lot of uneducated people out there that don't understand the risks that they were taking by giving their crypto. I mean, there's two layers of risk. There's investing in cryptocurrency or altcoins or Bitcoin or whatever it is that you're going to invest in.
Yeah.
And then add another layer onto that, that now you're investing it in an unlicensed, unregulated, unregistered investment company with a known, very shady character at the helm to begin with, right? You're just adding risk on top of risk on top of risk on top of risk.
And present it as a bank account earning an interest rate.
Oh,
I mean, that's because really what you're describing is like, I'll just, give a large portion of my net worth to Uncle Jordan, and then Uncle Jordan will go invest it for me, and then I'll just, get money back for it.
exactly
Which is
right.
like, why would I, trust Uncle Jordan more or less than Celsius or something, or clearly Uncle Jordan more.
Because I'm
Yes.
Uncle Jordan, right?
That's right. That's right. Yeah.
You
So,
know,
but the Celsius, there's like no promise, nothing, and no getting the money back. Yeah. But then they advertise it as a bank account. So,
and my heart breaks for those people that literally lost it all.
yeah.
And Alex Mashinsky did a great job doing Twitters all the time and putting out stats and trying to put on this show that they're oh so transparent.
Yeah.
And and that he's such a good guy. And at the end of the day, I mean, Will, I don't think anybody who's been in business for any period of time would look at that guy and his history and his modus operandi and his personality and his persona and his company and the people that he hired and the way he was marketing and how his business was structured and not just say, like, this is a horrible idea, just absolutely horrible idea. And I feel bad for those people who lost money. I don't feel bad for those people who still today are saying, let's buy the sell token and short squeeze, the short sellers. And like, I just literally, my head cannot wrap itself around that level of stupidity.
That's right. I'll let you choose your own adventure here. It's either, I'm curious to ask, when it comes to the tulip mania question, how do you answer the question how sell token is clearly tulip mania, but Bitcoin's not? Or the other thing that I'm still pretty uncomfortable with is Tether, where Tether has $66 billion of market cap to it. And like, is Tether different, for its stable coin, where if Tether had a bank run, how much DeFi would collapse that's depending on Tether and have this big ripple effect? I know the Bitcoin network, Bitcoin protocol is different, and there's not that much wrapped Bitcoin on Ethereum, but there would definitely be ripple effects. I'll let you pick which one you like.
Can I take both?
You could take both. Yeah.
I'll take both. Let's start with the tulip mania. Okay. I thought Bitcoin was tulip mania, right? That's why I referred to it at the beginning of this podcast. Is I viewed Bitcoin as something so asinine, so stupid that anybody would ever put any amount of money into it. That value was created by the greater fool theory, right? Except in the case of tulips, you actually had something to look at, right? Or some hope of some beauty that you could add to your home. But
some intrinsic value.
With Bitcoin, there's not. It's zeros and ones on a ledger. So the sell token is pretty clearly tulips because it's being sold, right, by a centralized entity saying it has value because we say it has value, and we're going to create value from this token that we've printed billions of just out of thin air, right? And that is a centralized experiment, no different than if a bank were to say, hey, give us your money and we're going to put it in an uninsured CD, right? So it's the same kind of thing. If the bank goes bust, okay, your sell token goes bust, your CD goes bust, it gets locked up or tied up in a whole bunch of different complex things. That is the tulip, right? That's the thing that has value because someone says it has value. Bitcoin is unique. Bitcoin has solved a mathematical problem that has never been solved ever in the history of mankind to the best of our knowledge, right? It has a limited supply. It's divisible, not infinitely, but to a very, very high degree. It's very divisible. It's mined by improving the network and the reliability and the strength. It's decentralized so that no individual person, no individual bank, no individual miner, no individual company, no individual group of people or groups of companies or groups of hackers or groups of conspirators or whatever. It's impervious to all of that, and it can never be double spent. The trust problem with the Byzantine generals, problem, the trust problem of how do I trust Bitcoin, or how do I trust Bank of England, or how do I trust the central bank of the United States, or how do I trust, a lending institution? How do I know that there's not going to be fraud? Bitcoin solves all of that, and it's all in the protocol, and it's all mathematical, and it's all transparent. And to anybody who's smart enough to read the code and see the code, and who operate their own nodes and run their own piece of the software on it, and see how it's all done, you can literally visually watch the blocks being created and made, right? And the longer Bitcoin goes, the stronger this network grows. And there's only 21 million. Now it's divisible, right? It's divisible. That makes it easy for us to go buy $5 a Bitcoin if we want. We can go buy 5 cents a Bitcoin if we want to. But if you want to own a whole Bitcoin, you can own any fraction from 0.00000001 to 21 million if you can get your hands on it. That's real scarce value. I mean, gold doesn't even have that, right? Like I like gold. I'm not an anti-gold guy, and I'm also not a diehard gold bug. I think gold has its place in traditional finance. It is the legacy hedge, right? And Bitcoin is the new generation hedge. But even with gold, it's not infinite. It's not uninfinite. It's a finite resource, but it's a resource that we're still finding more gold, and we're finding more deposits and more reserves. We're mining more of it out of the ground. And it's, ironically enough, it's proof of work, right? Maybe you can find a gold nugget laying on the ground, but you have to go mine it. You have to go prove that you mined that gold with the work by getting it out of the ground, extracting it from the ore, putting it through its processes, right? It takes huge equipment, it takes massive amounts of fossil fuels, takes massive amounts of electrical energy, damages the environment like crazy. The chemicals that they use are nuts. And yet we've been doing that for thousands of years, right? And along comes Bitcoin and solves a lot of those problems. And it has similar properties, but arguably much, much better properties than what gold does. And what I love about Bitcoin is I can have 24 words in my head, and I can take my wealth anywhere in the world with 24 words memorized, right?
Yep.
You can't do that with gold. If I say, hey, honey, I have, I have $100,000 of our life savings put away in gold, and it's in our basement. We go on vacation for 2 weeks and come back and our house is broken into and our $100,000 of gold is gone, right? Or if I say, hey, honey, the world is coming to an end. Let's hop on an airplane and take our wealth with us and let's go live in El Salvador, right?
Yeah.
Grab the gold. How are you going to get $100,000 of gold to El Salvador? Like, you can't do that, right? Bitcoin fixes this. So tulips is cell token nonsense, right? It's artificially created tokenomics to try and make something make sense that should have never been made to make sense ever. It should have never been invented. So let's talk about Tether, right? And the
one thing I was going to say before Tether was just, tulip mania, so many parallels, 20,000 different cryptocurrencies, each one's a new tulip. And it's like, no, there's only one Bitcoin. And I think the big innovation is when everything went digital, that made it where if you had one printed book, you could make a printed book digital and make 1,000,000 digital copies, 1 billion digital copies for free. Bitcoin's almost going backwards to say, let me make something digital but scarce. And there's a finite amount in a digital thing. And I think the world still hasn't priced that in yet, of the value of making a digital thing that can't be copied to infinity.
You know, and let me address the Ethereum bulls on that, right? Because the ETH bulls say, listen, ETH 2.0 is going to start destroying more ETH, right, than is created.
Ultrasound money.
Ultrasound money, right?
Yeah, yeah.
Okay, tell me how much? How much is going to be destroyed? And at what schedule? And how much is going to be left? And how does the supply demand equation work out over time? How does this work? Nobody has the answers to that. There's a formula, right? And there's probabilistic outcomes, and there's algorithms that they're going to create to operate the Ethereum blockchain in a certain way. But with Bitcoin, I can tell you, just ask me the question, Jordan, how many Bitcoin are there ever going to be? Ever, there's going to be 21 million, ever, never. There's not going to be any more than that, ever. It's super simple, right?
Yeah.
How much of it's lost? I don't know, but that makes it less than 21 million.
That's right. And I don't want to dunk on the Ethereum people too much, but the one that's most insane for me is the Ethereum blockchain hasn't even been going 10 years yet, but no one can tell me the answer of what is the exact amount of Ethereum in the circulating supply. You know, supposedly that no one actually knows. You know, maybe it's around 121 million right now or something, but there is supposedly no way to know what is the exact number. Like it can't right. be done, audited. I think, you know, CoinGecko, et cetera, they give their best estimate of what it is, which is so confusing to me, because we just talked about how a blockchain, you can audit the whole thing and trace the whole thing. How right. is it not possible to know the exact number of Ethereum? Yep. Anyway.
Yeah, it's a very interesting world. Like I'm not a Bitcoin maximalist. I would say that I've become more of a Bitcoin maximalist over the course of this bear market than prior, because I now have my eyes open and I realize how speculative some of these other protocols are. But what I can say for absolute certain is that Bitcoin is a certainty. It is a mathematical certainty, and the price is going to fluctuate up and down. But I will tell you, my confidence in Bitcoin as a protocol, my confidence in Bitcoin as an asset is at an all-time high. I don't care if price goes to an all-time low. My confidence in Bitcoin and what it is and how it works and how immutable it is at an all-time high.
Yeah, man, not to just go forever, but I think the other wild thing to think about is Bitcoin doesn't care who you are. As long as you have your seed phrase or private key, you can transact or spend Bitcoin. And to really think of it as an internet of money, getting to the smallest level of sats or satoshis, having different applications or interfaces out there. You know, I hear it all the time. Back in 1999, the internet existed. It was so slow to just send a JPEG image. It would have been impossible to imagine Netflix as a full-on streaming service in 1999. To imagine just digitally transferring value through Bitcoin or Satoshis in a programmatic way around the world. Tough to even imagine like what that could unlock. But anyway, we could talk about Tether next.
All right, Tether. So full disclosure, I am not a stablecoin expert by any stretch, okay? Here's what I will say about Tether is there's enough controversy around it. There's enough people who have made statements that raise eyebrows, right? There's enough speculation around it that I just think it's unhealthy. If Tether were to go, if Tether were to break its peg, there'd be a run on the bank. If Tether were to really head down that same path that Terra Luna did, okay, backed by whatever it's backed by or not, the damage that does to the crypto and blockchain and Bitcoin ecosystem is massive, right? I think Celsius was a warning to people. I think Luna was a warning to people. people have been, talking about Tether and speculating as to whether or not, their stablecoin is actually backed by enough to make it worth, $1 per one USDT. I don't want to speculate on that, but here's what I can say is for that amount of yield that you generate in owning it, why? Just why? I would rather own US dollars and keep it in a fiat world than own a piece of something that has the potential to end up like UST did.
Yeah, I've not looked at Ethereum too closely. Tether too closely. Is Tether an ERC20 token that runs on top of the Ethereum blockchain or no?
That's a great question. And again, I haven't gone down that rabbit hole
Okay.
with Tether at all.
Yeah, because I haven't heard it if Tether is its own blockchain, like its own token on its own blockchain. Yeah, maybe it's like worth a Google to just find the answer really fast,
ERC20 token. Okay, according to Google, Tether on the Ethereum blockchain as an ERC20 token is a newer transport layer, which now makes Tether tokens available in Ethereum smart contracts or decentralized applications on Ethereum. As a standard ERC20 token, it can also be sent to any Ethereum address. So in theory, wouldn't that actually pose a risk to Ethereum as well?
Right, that's what I'm getting at, because to me, Ethereum already has it in its history to do a hard fork to Ethereum Classic when there was the MakerDAO hack. I wonder if $66 billion worth of wealth was destroyed and Tether went to zero, if it's and it broke all of DeFi because of how much yield is based off Ethereum, would the Ethereum Foundation and developers be compelled to do another hard fork to like back before Ethereum went to zero for the sake of saving their entire cryptocurrency ecosystem?
Like time traveling in reverse?
Yeah, exactly. They did it before, right? So it's not like it's unprecedented for Ethereum.
I guess, like I said, going back to the disclosure that I gave when we first started the Tether conversation, I'm not a Tether expert. I'm not a stablecoin expert by any stretch, right? I haven't played with it much. The one that I played with was UST. And I literally
Did you play with UST?
I had 200 grand on UST. Wow. And I pulled it off UST literally a week before the collapse.
Wow.
A week. It was on Terra Station, and a week later, and it would have been an absolute total loss.
So, okay. So obviously you're a very disciplined investor. You made sure to call Do Kwon himself personally to talk to him about UST before, buying some for the Anchor protocol. When you bought UST for Terra Foundation or Terra Station, was it on Anchor? I don't exactly know how that all worked.
So in order to get to UST, I think there's probably a bunch of ways you can do it. You got to buy DC, and then you got to transfer it into UST, and then you take UST and you put it onto a Terra Station wallet, and then you stake it on the Terra Station wallet, which is Terra Labs, right?
Yeah.
And then you unstake it, and you have to go through the whole process kind of in reverse. Depending how you do it, though, there's a lot of limitations to how fast or how soon you could get this all unwound. Now, I bought for my portfolio, I bought a token amount of Terra Luna. And when it all started,
200,000 is the token amount, or no?
That was UST. That was not a token amount.
That was not. Got it. Okay.
Right. But I wanted to experiment with it, and I'm like, I want to learn, and that was my learning investment. Like, I want to put a little bit out there so that I can understand what this stablecoin thing is all about. And I want to do it. I want to go through the process. I'm not a techie kind of a guy. I'm an investor, right? So for me, it was actually a pretty interesting process to have to go through the 5 different steps to get UST and to stake it on Terra Station. But my spidey sense kind of peaked up a couple of weeks before the Luna blow up and the UST depeg. And I literally found myself questioning Do Kwon, his integrity. I watched, an interview with him where he was saying how fun it was to watch companies blow up, right? And he oozed arrogance. He just oozed arrogance. And I said, like, I never want to take a bet on somebody who oozes arrogance and say that they're right all the time, because karma's going to bite them in the rear end and they're going to be proven wrong, right? I just didn't know it was going to be like a week later.
Yeah.
So my spidey sense was kicking off, and I said, okay, like I need to unwind this. I need to get this thing, pare down my risk. So if this thing blows up, it doesn't change my lifestyle. It might sting, right? But it's not going to change my lifestyle. And so I pulled that money off. I went through, I don't know, many days of ultimately unwinding it and getting it back into fiat. And I just said, like, that was a giant pain in the rear end. And for what, right? For the small amount of interest that I made over a very short period of time.
Well, the goal was to get 20% APY, right? The goal was for it to not be a small amount.
That was the goal. But even if I had earned a 20% APY on that amount, right, still wouldn't change my life.
Yeah.
It wouldn't change my lifestyle, right? So it wasn't
even with all that risk. Yeah.
With all that risk. And so for me, it was an experiment. When I became uncomfortable, I paired it off. But here's what I couldn't do. I couldn't get my Luna off fast enough. I couldn't unstake and unbond my Luna that I had on Terra Station. And so that little token amount of investment, when UST depegged and Terra Luna crashed, I had zero hope of getting any of it off. That's an absolute write-off, 100%.
Did you ever get it off or no?
No.
So
no.
you still have Terra Luna and it's worth 0.0000, whatever.
I couldn't buy a hot dog with it at Costco.
With your Terra Luna.
Yeah. I will say this. I'm grateful for the lessons learned the hard way, right? I really am. Like losing that Terra Luna and going through that process with UST made me a better, smarter, more educated, and more humble investor in the blockchain space at all. And so, while I can sit here and I can say ad nauseum that, every hard lesson learned in life has paid dividends, this one I can say, I think it's made me a better investor. It's made me smarter. It's made me wiser. And now I understand the systemic risks in a lot of things in this space that I didn't. I mean, I've basically dedicated a year and a half of my life to just learning about this stuff because I find it fascinating, right? And if I'm going to place capital there and I'm going to be an investor in this space, sometimes I need to learn things the hard way, as long as it's a measured bet, right? And I'm not risking everything, and it's all with a risk versus reward in mind. Sometimes you learn those hard lessons and you're grateful for them. And as odd as it sounds, I'm grateful for the lesson that I learned, because I don't think, no matter what the next cycle looks like, no matter how great the altcoins are doing, I'll never sit there and say, oh, I wish I had more, or I wish I had those, or gee, maybe I should buy this alt token this week, right? I'm just never going to do that again, because now I have a much greater, much more fundamental understanding of how things can go wrong. So, I learned a lesson without going bankrupt, and that is beneficial.
Yeah, it's funny. I think in the Bitcoin community, they call it paying your tuition. This is your paying your tuition to learn more about Bitcoin and everything else. I think the lesson I'm getting from you is, for you personally, for your risk appetite, you at least have enough background and hard lessons learned to know what a great opportunity there is in Bitcoin, and in simply holding Bitcoin and letting it mature over time. But of course, still looking, but what else? Like, what else there could be? And at least you've gotten better at finding red flags. Certainly with Celsius as an example, and certainly even if you do dabble in Terra Luna and UST, you're able to pull out before. But yeah, I'm curious, like, what would your recommendation be for the people who are looking to branch out beyond Bitcoin only. For me personally, I'll just say, I don't have the time to dedicate to, pursuing other than a diversified, hashtag not financial advice, but other than just having a diversified portfolio of index funds, which over 30 years tend to do pretty decent, and then having Bitcoin with a time horizon also of 20 or 30 years to hold and just dollar cost average in. That's what I've done. But it sounds like, for you, it is curious, to meet that risk appetite. Like, where are other opportunities besides simply holding Bitcoin?
I don't know that I would recommend to anybody to do anything other than hold Bitcoin.
Well, here it comes. Okay.
If I had to do it again, if I had to start from scratch, knowing what I know now, Will, and everything that I've learned over the last, year and a half, 2 years,
Yeah.
I would say that owning Bitcoin, while it may underperform, in the short run, or maybe even in the long run, it may underperform some of these other alternative protocols and alt tokens. It is still the best risk versus reward weighted investment on the face of the planet. And so, listen, do you need to make 1,000x when Bitcoin can make 100x? If that's a bet that you want to take, then go sling Solana and Ethereum and play ETH 2.0 and, go follow the traders with the algorithms and, do all that brain damage to yourself. But I think for the average person who's not a professional investor, in the sense that when I call myself a professional investor for 25 years, I mean that for the vast majority of that 25-year period of time, I have made my living allocating my own capital and capital of my partners, right? So when you are allocating capital for a living, it's a very different thing than someone who has a 9-to-5 job, or maybe is an entrepreneur who has a steady income, who has a house and the white picket fence and a mortgage and kids. And, if you want to save and invest in Bitcoin as a speculative savings tool, I'm all for it. Like, I think that's great. That's what you should be doing. If you want to dedicate your entire life to it and you have the appetite to become a trader, knock yourself out. These other investments that I've gotten involved in and the other areas in blockchain that I've gotten involved in are bets on blockchain long-term. Now, there's a lot of people, there's a lot of Bitcoin maximalists that will tell me that I'm wrong and that, blockchain is nothing and Bitcoin is the only solution for blockchain that makes sense. I don't know that they're right. I'm betting that they're wrong, and I could be wrong. But I just watched an interview with Stanley Druckenmiller from the Sohn conference. And I remember watching an interview from him, I don't know, about 3 years ago, 2-3 years ago. And he said, I think that Bitcoin is a solution in search of a problem, right? And in this recent interview, he said that his guess is that 5 to 10 years from now, blockchain is going to be a major disruptor of traditional financial institutions. And, he made a few other comments on it. So, I mean, that's how a multi-billionaire, self-made guy, professional capital allocator, right? Professional investor for, I want to say 40 years, maybe longer,
right?
Now views Bitcoin. And so if a 70-year-old investor has made that leap in 2 years, given the current set of circumstances that we find ourselves in the world, I think it makes sense for everybody to have a little bit of Bitcoin. Hashtag not financial advice.
Yeah.
Okay.
Right. Yeah.
But I think the most important thing is getting people off of zero, because if Bitcoin does what I think it's going to do, and I think, Will, I'm not trying to put words in your mouth, but what I think you think it's going to do, having zero is a much greater risk than losing 1% of your net worth if you were to allocate 1% of your net worth to Bitcoin.
Yeah.
And that's kind of how I feel about it.
Yeah, definitely. I mean, I think that was maybe Ray Dalio's comment on, great monetary inflation of the reason to have 1% of your portfolio to Bitcoin is because if we do have this big financial reckoning and Bitcoin ends up going 100x and everything else goes to zero, well, then you've at least preserved 100% of your net worth in that, cataclysmic event. And then he would say maybe to do 2%, because if it does happen, then he's also done well for himself. So,
Right.
yeah.
Right.
Yeah, no, I appreciate what you're saying, because definitely, you're able to express yourself so well in the Twitter spaces, and there's a lot of plebs out there in the spaces. And, there's a concept of unless your profession is investing other people's money and it's your goal to on purpose generate a return for them that beats whatever various benchmarks or indexes, like that's the reason, then yeah, you are looking for that alpha or where you can get that edge. But if you are just trying to save for the long term, there's no better investment. I mean, again, diversify so that you can handle the short-term volatility, but there's no better investment in the long term than Bitcoin. I will say, if you really, I know when you were talking about your story as a pilot and the guy with the jet warbirds, you had some other story as well, or I don't know if that was the story.
That was it. It's a little
okay,
more.
That was the story. Yeah.
It's a little more involved.
Okay.
But you want to hear the story? Or are we out of time?
You're smiling as soon as you think about the story, so I mean, you seem pretty excited. If otherwise, I would just ask your last word and stuff. So.
All right, I'll try and get this down to like 3 or 4 or 5 minutes.
It's all good. Your enthusiasm for it is what makes it fun to listen to. So.
Well, listen, I'm enthusiastic about Bitcoin and blockchain. I'm also enthusiastic about airplanes and fighter jets, right? So.
Yeah.
So I found myself many years ago interested in buying a jet warbird and came across this guy. His name is Marty Tibbetts, Tibbits.
And was this the guy involved with the cartels? Or
yes,
no?
Yes, it was. Yes, it was. Right. So funny enough, I had met him at the Reno air races. He had come to Vegas. I bought him and his wife drinks one time. I'd communicated with him over the internet and Facebook. Met with him at a jet warbird flying one time just to learn. I just wanted to learn. Nice enough guy, super personable, talked about his business. He had a call center, lived in Michigan, was on Facebook, had this giant mansion. I mean, had to have been 20,000 square foot mansion right on the lake, had tons of airplanes, just a very successful entrepreneur. I didn't know him well. I had met him maybe 3 times in my life. Talked to him maybe 2 times on the phone, but saw him on Facebook all the time. So, and I think it was 2018, died in a crash in one of his planes. Pilot error, he screwed up and he was not trained well enough in a very unique airplane. Crashed it and killed himself and hurt a bunch of things on the ground. A bunch of lawsuits ensued. Never really thought anything of it, aside from I was just waiting for the final report as to what was the true and complete cause of the crash. So I get into crypto and I'm flipping through Twitter, I don't know, a year and a half ago, and I see Marty's face, like a picture of him in his flight helmet and all that stuff. And I'm like, what the hell? Why is Marty Tibbetts in my Twitter feed? Like, I don't follow him on Twitter. Like my Twitter is basically about crypto, period, right?
Yeah.
And so I look at the article, and it was something, I'm paraphrasing, but it was something along the lines of drug kingpin or drug lord financier moonlighted as a fighter pilot. I'm like, what? Yeah. So I clicked the link, and I think it's got to be like clickbait, right? And sure enough, it's this story about Marty Tibbetts and how the FBI has been looking at him for many years, that apparently he had some sort of a legitimate business, but he started financing an international drug smuggling cartel. And he was financing them and paying for things in cryptocurrency and among other ways of transferring money. Yeah. But how they caught him is he came up with this ingenious idea, and he really was an ingenious guy or genius guy. In a few times that I met him, in a couple of phone conversations I had, very, very smart, very articulate. In fact, I want to say he was another MIT guy, super smart. And so he had designed a submarine that had magnets on it, had a GPS, and this thing was autonomous. And so this little underwater drone, and they'd load it up with drugs, and they would snuggle up to a shipping container ship and attach with these magnets, these electromagnets, and hitch a free ride across the ocean. And then when it got to the other side of the ocean, they would fire this thing up. It would connect to a GPS, and then it would detach, and they could run this thing underwater to pre-programmed points autonomously and deliver all these drugs. And he paid the engineer in another country in Bitcoin. And the DOJ, at the FBI, right, who watches all these transactions, had linked Marty Tibbetts to buying that Bitcoin, transferring that Bitcoin, and the exchange that he bought it on. And I'm sure there's a whole bunch more to it than that.
Yeah.
But it's not anonymous. Like Bitcoin is not anonymous in the sense that, when you buy it on an exchange, it's pretty clear who bought it, right? When you transfer fiat to an exchange, they know who bought it. And it's unique. It's got a thumbprint, right? It's got a mathematical thumbprint. So wherever you send it, that Bitcoin individually forever is identified by that thumbprint or by that DNA in the code. And, he was dead by the time that they had figured it all out, but it was a fascinating story that just proves that if you're a criminal, Bitcoin is not the choice of currency that you want to use. Like it's far less illicit than actual fiat printed US dollars.
Yeah, no, that's right. That's absolutely right. I think that's another blind notion people have of, of course, US dollars cash is used by drug dealers, but that doesn't mean I'm a criminal. So, but on the flip side, because Bitcoin's new, it's a scary thing. Actually, I had one more burning question to ask you. So you've listened to Michael Saylor and you have a background in real estate. Have you ever heard his analogy that Bitcoin is like a digital hotel in cyberspace, or digital rooms in hotels available to rent in cyberspace? Have you heard that one or no?
I haven't heard that. I've heard his analogy of calling it like prime Manhattan real estate, right?
He does do that. Yeah.
Yeah.
So there's the one of, you can have a building in Manhattan and you have it forever for generations, and that's Bitcoin. The other one is, he says, if you have a hotel, it's not efficient because you can't have 100% occupancy all of the time for the hotel. Like you always have only some rooms available, and it's tough because what if you have someone in Japan who would like to rent a room in your hotel, or someone in Korea or Mexico or something, but you have only one physical hotel location. Well, if you thought of your Bitcoin as digital cyberspace, as a digital skyscraper in Manhattan or something, you could rent out every single room instantly, digitally, anywhere around the world, and for any amount of time, any arbitrary amount of time. I guess I'm telling you that idea for the first time. I don't know which podcast it was, but I don't know if your sense of real estate and background of real estate, you see an appeal to, like, quote unquote, you yourself through self-custody lending out or borrowing Bitcoin in that way.
Well, let me say that I think Michael Saylor is brilliant. He's absolutely brilliant. And if it was me debating against him, he would chew me up and spit me out. Right. So what I'm going to say, he could probably
if he gave you a chance to talk, I mean, he definitely will gladly go on and on if you don't interrupt him. So.
For sure. He is a talker. And he's also a brilliant debater. Right. So I leave it to Michael Saylor as to how he wants to articulate his position on Bitcoin. I like real estate, and I think it's not analogous to Bitcoin because it can produce income, right? And Bitcoin cannot produce income other than its appreciation and conversion back to another currency. And so now, by the way, I have an interesting thing to tell you specifically about Michael Saylor and generating yield on Bitcoin. I'll get to that in a second. But at present time, I don't know a way to buy a tower of Bitcoin and make it debt service itself and generate a yield on top of that for me. Okay. I can't run Bitcoin as a business. I don't think that Bitcoin is analogous to real estate other than scarcity. Now, he uses the Manhattan real estate, right? He says like one Bitcoin is like one block of Manhattan real estate. Why would you ever want to sell one block of Manhattan real estate? They're not printing any more of it, right? And I agree with that in the sense that it's scarce. And yes, you can go buy a block of real estate anywhere else in the country, many other places in the country, but it doesn't have the same intrinsic value. But a lot of things can change with real estate. Bitcoin is pretty static, right? What changes with Bitcoin is its network size and the users and the number of wallets and the size and number of the transactions and the number of nodes and like those fundamental things, right? Here's what I learned about real estate in the downturn is that real estate is not just an asset, but it's also a liability. One of my very, very best friends, who's been one of my investors since I started in the real estate business at 18 going on 19 years old, he was one of my very large investors leading up to the real estate crash in 08 and 09. And he struggled like hell because when we had all this real estate, he still had to make tax payments. He still had to make insurance payments, right? He still had to repair things. He still had to secure things. And, you know, you could own Bitcoin and put it away in a ledger and forget about it for, 10 years until the financial crisis is over and the price of Bitcoin improves, right? With real estate, you can't do that. It degrades in value in bear markets. And then on top of it, it becomes a liability because you have to feed it. Yeah. Now, God forbid you have a mortgage on top of your taxes, on top of your insurance, God forbid association dues, right? You still have to maintain it. You still have to landscape it. You still have to keep the electricity on, even if there's nobody in the building or nobody in the house. Those are fundamental differences between real estate and Bitcoin. I appreciate what Michael Saylor tries to do with this idea of scarcity, but I don't think that it's a great analogy to draw for many, many, many reasons.
Yeah, luckily he's got a million analogies in his Bitcoin analogy tool belt. So
he does.
But yeah, that's definitely the quote-worthy one. Real estate is not just an asset; it's also a liability. Versus Bitcoin, you can store securely, knowing it is an asset.
It doesn't cost you anything to hold.
Yeah, it doesn't cost you anything to hold. There it is. You said there was something else about Michael Saylor?
Oh, yes. Okay, this is scuttlebutt, and I'm not a person that loves to circulate rumors by any stretch.
Oh, here it comes.
But I heard that Michael Saylor and MicroStrategy is trying to find a safe way to generate yield from their Bitcoin. I have no idea how they're going to do it or what the plan is or what the thought is, but I know that that's been on Michael Saylor's mind.
That's kind of interesting because already he's done through Silvergate, 4% loan to value loan with the Bitcoin as collateral. I mean, that would, I guess, be the traditional way to earn yield, supposedly from the Bitcoin. So he's thinking of something else then as a way to earn Bitcoin with what he has. Yeah.
I don't know what it is. I don't know if it's coming or not, or if it was just a fleeting thought. But I've been told from, people who know that it's been a topic of conversation in and amongst Michael Saylor and his board. Whether that's true or not, I can't speak to that. However, I would say it seems to reason, right? If you have a multi-billion-dollar asset sitting on your balance sheet, why wouldn't you try to find some way safely to generate some yield from it? Right?
Yeah.
If he can figure that out, then we can have the real debate of real estate versus Bitcoin and, how they're analogous to each other.
Yeah. And just listening to you and the way you invest, I know you take very seriously who's the leader of the effort of the fund, what's their personality, how much respect you have for them. Alex from Celsius, Do Kwon from Terra. Certainly it sounds like with Saylor, you'll definitely dabble at least a little bit into whatever Saylor cooks up, to see how it is.
I think he's a smart guy. I think his greatest downfall has been his lack of interest in timing the market.
Yeah, he's like, I'll buy at all-time high all the time. I don't care. I'm always buying at all-time high because I'm always buying. He does not care at all about, but that's his conviction, right? You know, he's like, I'm a publicly traded company. This is my SEC filing 10K. We are buyers. Buyers are, I don't know if last resort's the right name. Buyer of first resort. The first chance he gets any dollars, boom, in Bitcoin. Yeah.
And honestly, I don't get that. It seems irresponsible to me unless his conviction is just simply what he states always, which is, I'm afraid other people are going to figure this out and I'm not going to be able to buy more, right?
Yeah, you just don't have the laser eyes yet, Jordan. So that's clearly the
difference. I did have the laser eyes. I had them on my profile for a while, and I took them off and replaced them. I figured that was a sign of the top, and I don't want to have memories of the top.
But yeah, my last question would be what you say to anyone who thinks it's too late to get started. But do you have a last word before answering that question?
No last word, so I'm happy to answer it.
Okay, so yeah, what would you say to anyone who thinks it's too late to get started in Bitcoin?
I would say that if you look at the internet and you look at other technologies, we are still very early. We are so not late. But this is a 5 to 10 year ride from here. And I'm really passionate about trying to, put people's minds in the right time frame, because this is, even though I bought Bitcoin at the perfect time where it had, tripled in value literally 3 months after I bought it, ish, give or take. And that was a really neat experience. It was a really fun experience, probably the worst experience that I could have ever had, because it just made me want more and more and more, right?
Yeah.
But if you look at the internet adoption curve, we're about 1996, 1997 in terms of following the logarithmic growth trend. Now, if you want to be analogous to markets, we're probably about the 2000 .com bust right now, right? In terms of the financial event that has been unfolding here, and that's probably not over as we sit here, record this in June of 2022. We are in the midst of the crypto blockchain .com moment. And so look at what Bitcoin, look at what the internet did and all it achieved, and all the internet companies that thrived from 1997 to 2000, and from 2000 to 2022, right? Out of that was born Google. Out of that was born Amazon. They all had 80, 90, 95% drawdowns over and over and over again through some of the most tumultuous periods of adoption of the internet and all the technologies thereof. My core belief is that in the next 5 to 10 years, just like what Stan Druckenmiller says, is that blockchain is going to be a major disruptor, and it's going to be a major economic driver. It's going to infiltrate just about every part of our lives in one form or fashion. Maybe it's not Bitcoin as a global reserve currency. Maybe it is. But blockchain is here to stay. The invention is real. And the realest invention, the most unique invention above and beyond all the other blockchains, is uncategorically, undeniably Bitcoin. And so you're not late, you're very early, but that doesn't mean that there's not going to be a huge amount of volatility along the way. And I think anybody that enters now just needs to be prepared for that, to stomach it, to size your position or your investment or your savings or whatever you want to look at it as. Position it appropriately, size it appropriately. And if you do that, look back in 5 to 10 years. And if I'm wrong, I'll buy you a beer. And if I'm right, you buy me a beer.
All right, beers all around. Well, I think, Jordan, that you said it's so early. Thank you, Jordan, for coming on to the podcast.
You're very welcome, Will.